Hello everyone, I hope you are doing fine. In this video, we will be solving another numerical problems regarding the fund flow statement. So, we are given the balance sheet of the GHI Limited. Given below is the balance sheet of GHI Limited. Okay, so let us just fill up the contents first. So, particulars and the balance sheet is for the year ended 31/12 2022 and 31/12 2023. So, and then we have given the assets. Number one is cash, accounts, receivable, inventory, equipment, accumulated depreciation. Let us just move it further away in order to coincide. After the accumulated depreciation, my total assets should be calculated. This will be my total assets. Okay. Then the other head will be liabilities. Accounts payable, bank loan, equity, equity में we have the common stock, then the retained earnings, making it the total liabilities and equity. We have a cash of rupees 15,000 for the year 2022 and for the year 2023 the cash is 18. The accounts receivable is 30,000 for the year 2022 and 35,000 for the year 2023. We have the total inventory of rupees 45,000 for the year 2022 and 40,000 for the year 2023. We have an equipment of 95,000 for the year 2022 and 1,05,000 for the year 2023. Accumulated depreciation amounts to rupees 25,000 for the year 2022 and 30,000 for the year 2023. Making my total assets as 1,60,000 for the year 2022 and 1,68,000 for the year 2023. Then account payable. For the year 2022, we have the 35,000. For the year 2023, we have the 28,000. Bank loan is 25,000 in the year 2022, which increased to 40,000 in the year 2020. Let's talk about equity. We have the 60,000 as the common stock for both the years. Retained earnings 40,000 for the first year, that is 2022, and 40,000 for the second year, that is 2023. Total liabilities and equity amounts to rupees 1,60,000 for the year 2022, and for the year 2023 it is 1,68,000, matching with the current asset. Oh, sorry, matching with the total assets. Okay. Also, we have given some additional information. Additional information is given below that the net profit for the year is 20,000. Dividend paid is 12,000, and the depreciation for the year is 5,000. This is given to us. Now, let us proceed towards the solution. Firstly, we'll talk about the schedule of changes in the working capital. Okay, hence working capital is equals to current assets minus current liabilities. So, we have the statement of changes in working capital. Particulars 31/12/2022, 31/12/2023, and then changes. Let me just yeah. So where here we'll talk about just the current assets and current liabilities. First current asset will be the cash, then is the accounts receivable, then is the inventory, marking my total current assets. Then the current liabilities, in this case, it is only the accounts payable, which will mark the working capital. Now, total cash is 15,000. Accounts receivable 30,000. We can see this from the balance sheet. 15, 30 inventory, equipment. Total inventory is 45,000. Similarly, for the year 2023, it is 18, 35, and 40. Marking a change of 3,000 positive. Then here marking a change of 5,000 positive, and here marking a change of 5,000 negative. Making my total current assets is 90,000, 93,000, 3,000 increase. And the current liabilities, that is the accounts payable, is 35,000 and 28,000, which is showing a decrease of 7,000. Now the working capital, that is the current assets minus current liabilities. You have you have the total current liability assets as 90,000, and total current liabilities as 35,000. So 90 minus 35 is the 55,000, that is the working capital. 93 minus 28 is the 65,000, that is the working capital. And this resultant change is rupees 10,000. Okay, so this is how the working capital will be calculated. Now, again, we'll calculate the sources of funds and the uses of funds. So, sources of funds. Number one source is the issue of the bank. Issue of the bank loan is INR 15,000. Net profit is INR 20,000. Decrease in inventory is 5,000, and decrease in accounts payable is rupees 7,000. Then comes the uses of funds. Increase in accounts receivable. That is rupees 5,000. Purchase of equipment. That is rupees 10,000. Dividend paid. That is rupees 12,000. Making the total sources of the funds as 47,000 and the total uses of the funds as 27,000. So here the net increase in the working capital, or I should say the changes in the working capital. Okay, so let us talk about the changes in the working capital. That is equals to sources of funds minus uses of funds. Sources are 47,000 and uses are 27,000. That means the changes in the working capital amounts to rupees 20,000. Okay. Now finally we'll make the fund flow statement. Now in the end we will make the fund flow statement. Okay. Particulars. Amount. Now number one is the sources of funds. Number one is the issue of bank loan. Then is the net profit. Then is the decrease in inventory. Then is the decrease in accounts payable, marking the total sources. Okay, then next is the uses of funds. Then talking about the uses of the funds. Increase in accounts receivable, purchase of equipment, dividend paid, marking the total uses. And then the difference coming in will be the net increase in working capital. So let us now fill up the values. Sources of fund we have already calculated 15,000. Net profit is 20,000. That is also we have uh, given in the question. It is given in here. Then inventory decrease by 5,000. Accounts payable decrease by 7,000, making the total sources as 47,000. Now increasing the accounts receivable increased by 5,000. Plant purchase of rupees 10,000 and dividend paid of rupees 27,000. Sorry, 12,000. Making the total uses as 27,000. So the net increase in working capital is 47,000 minus 27,000. That is the 20,000. Okay. So this is it. This is the problem number third. I hope you are understanding this practice session of the fund flow statements. Thank you guys. Thank you so much.